What's going on, everybody? Liam O'Reilly, Vermont economic realtor with Jerry Riley Real Estate. I hope you're doing well. I received a great comment on my Vermont housing stats video that I released the other day asking about some of the downside risks in the Vermont housing market. The commenter asked about the vacation homes and what happens when inventory increases around Chittenden County and around Vermont. So I wanted to talk about the stats and look at the data as to what's happened in the past when inventories increased, where Vermont stands on vacation homes and seasonal properties, and how that's likely to affect the housing market moving into the future. So let's get right into it. First, let's take a look at the comment here. So Jefferson, thank you again for your comment. I really appreciate it. Let me know if you folks watching this video, if you have any thoughts, please leave a comment. I love hearing from you guys. So Jefferson says, and we're going to focus on this top section. The bottom section is great as well. It brings up points about the economy, but this primarily focuses on housing, specifically here in Vermont. So with inventory down and people paying top dollar, what will happen to the value of those homes recently sold when inventory increases? Vermont is like Florida, a lot of second homes. Ironically, both states are doing well with real estate, but if the economy tanks and there's significant job losses, second homes are the first sold. So, bringing up what Jefferson is talking about here, we move over to this article by VHFA, which is Understanding Vermont's Vacant Homes. And how they define vacant homes is the Census Bureau categorizes any home not occupied by a full-time renter or homeowner as vacant. So seasonal, occasional use vacation homes, or homes for rent, homes used primarily as short-term rentals, homes listed for sale are all considered vacant. So seasonal homes, 75% of Vermont's vacant homes are seasonal, occasional use, or vacation homes. And let me just go right back up to the top here. Let's see. Data shows that 19% of the total stock is vacant in Vermont, 21% in Maine. Maine's number one, Vermont's number two for vacant homes in the United States. So when they talk about vacant homes, they're not talking about homes that have been abandoned. They're talking about homes that are seasonal or occasional use, or homes that have been put on the market. But really, I think this is a good, and what they say here, 17% of Vermont's total housing stock are those seasonal, vacation, occasional use homes. And that's something that Jefferson brought up in his comment, is if there's a lot of these occasional use homes here in Vermont and we see a downturn in the housing market, are those homes going to be the first homes sold? So if we move over here to estimated housing units by housing type, again, VHFA, I'll leave all the links to these charts and to these articles down in the description for you folks. But if we take a look here, so Vermont in general, 192,000 owner-occupied housing units. Then we have about 77,000 rental units. Let's see, I'll get rid of that. And then 52,000 homes that are for seasonal use, right? These occasional homes, these vacant homes that you hear about, that the headline number is talking about. And what I mentioned in my reply to Jefferson is that it really depends on where you're looking in Vermont as far as are these vacant homes, are these seasonal homes going to affect you as a home buyer? Are they going to affect your market? So Chittenden County, right? I'm based out of South Burlington, which is right in the heart of Chittenden County. Owner-occupied properties, 42,000, almost 43,000. Rental properties, 26,000, and then seasonal homes, about 2,000. So relative to the overall housing stock in Chittenden County, there's not that many seasonal homes available. So, if the downturn happens and people start selling off their seasonal homes, sure, it's going to affect Chittenden County in some capacity, but the majority of homes in Chittenden County are not used for seasonal use. They're not used for short-term rentals. They're not used as vacation properties. This is primarily at least around here, is primarily a place where owner occupants and year-round residents live around Burlington. Now, if we look at Grand Isle County, which the article mentions as having some of the highest rates of seasonal properties per housing unit as a percentage, we can see that there's 2,500 owner-occupied properties and about 2,000 seasonal properties. So a much higher percentage relative to the overall housing stock are seasonal properties. And I know in Grand Isle County, some of these properties might not even be year round, so they can only be used seasonally. And if we look at this 52,000 number and we try to figure out where it's coming from, a lot of it is coming from some of these major ski towns. So I'm going to uncheck Chittenden County and Grand Isle County. And let's take a look at Rutland County. So 18,000, almost 19,000 owner occupied properties, 7,000 rentals, and 6,000 seasonal or owner occupied homes. And if we look at Windsor County as well, I know they had a lot, right? Basically the same numbers: 19,000 owner occupied homes, 6,000 rentals, and 7,500 seasonal properties. So these seasonal homes are primarily with Rutland County and Windsor County. They're primarily centered around the ski resorts down there. There's Okemo, there's Mount Snow, there's Killington. There's these ski resort towns that primarily attract vacationers, and so when Vermont has 17% of Vermont housing stock is seasonal or non-owner occupied owners, a lot of that is in the ski towns. And so if the downturn happens, if unemployment increases and people start selling their second homes, obviously probably before they sell their primary residence and move and take a loss on that, they might be willing to sell their secondary home and bring more liquidity to the market. That will mostly affect the ski areas and these high vacation destinations around Vermont, where people own the majority of their secondary homes, where the 17% of the housing stock is, which is primarily centered around vacation destinations in Vermont, which are the ski areas, or in Grand Isle it's the lake. Even though there's not that many homes in Grand Isle County, it's still a big vacation destination with a lot of seasonal or occasional use properties. So I wanted to just bring that up right off the bat, talking about seasonal and occasional use. And then let's dive into the inventory section, the second part of Jefferson's comment. So if we look at inventory and try to understand where we are at now. So what happens if inventory increases? And you can see here, this is coming from the NVRA monthly housing market stats, historical inventory of homes for sale by month. If we look at this chart down at the bottom, we can see it stretches from 2005, the first of 2005 is the start of the chart, to the I guess where we're at now, April of 2023, right? It doesn't have May yet. May's not over. I'm recording this on May 23rd. So we can see here from mid 2007 till about the end of 2015. So for about 8 years, inventory here in the MVRA district, which is Chittenden County, Grand Isle County, and Franklin County, fluctuated between 1,100 homes, which is the line below the trough there, and you see all the little swoops, and 1,750 homes, so 1,750 homes. So it fluctuated between those numbers, those inventory numbers, for the past for 8 years. And if we look at what happened to primary home sales during that period of time, and we can kind of extrapolate this data as data for all of Vermont, right? If inventory was high in Chittenden County, it was probably high in other counties as well. So if we look at this green line here, which is showing median home sales price in Vermont, we can see as inventory increased, home prices leveled off, and then they declined slightly, right? From a median sales price of $200,000 in 2008 to $190,000 in 2009, and then stayed pretty much flat, right? It went up a little bit back at $200,000, and then drops here to just under $200,000 in 2014, and then before skyrocketing back up. And we all know what's happened in the past few years. And if we look back at where we are now with inventory, we're under, as of April of 2023, we're at 176 homes here in Vermont. So, here in the NVRA counties of Vermont. So obviously inventory is very, very tight, especially relative to what we saw in 2008 and that crisis. And what happened in that crisis, right? Inventory goes up to between 1,100 and 1,700 1,500 homes, prices didn't really fall. Prices dipped a little bit and then they stayed relatively stable. So if we see inventory 10x, right? If we go from 176 homes to 1,700 homes, we can expect that the median sales price will basically flatten out if things behave like they did in 2008 and in the 2008 crash. They'll level out or decrease slightly, but not crazy. It's not going to be a crazy decrease in median sales price. Something else to note is if you look back at this data, if you look back at what was happening in 2005, so remember, the crash happened at the end of 2007 and the beginning of 2008. That was the start of the crash. And look at what happened to inventory leading up to that crash. Inventory bottomed out at the beginning of 2006 and then shot up to the middle of 2007, where for pre great financial crisis, it peaked out at just over 1,500 homes from its bottom of just over 250 homes. So obviously inventory was increasing drastically all across the northwestern Vermont region. What we're seeing now, if you look over to the right to where current inventory is at, we still have inventory below where it was in 2005, and we haven't seen inventory start to build up. So if we see inventory start to build up, then we know we're experiencing signs of housing trouble here in Vermont, and that's a sign that maybe housing prices are going to come down a little bit. Maybe the market is going to shift. But right now we're seeing inventory stabilize stabilize at a low number. We're at record low inventory rates right now, and if history is going to repeat itself as far as the great financial crisis, and we're going to see a decrease in home prices similar to what we saw in the past, we should expect to see inventory increase pretty drastically over the next year or so before we see prices start to decrease and probably decrease marginally. Now, if they get worse than the numbers that we're seeing, if we see inventory at around 3,000 homes, then we can expect declines that are going to be significant and much deeper than they were in 2008. So anyway, Liam O'Reilly, Vermont economic realtor. Let me know what you guys think. I know there's a lot of data and a lot of points to go over in this video, but I love hearing from you folks. Do you agree with me? Do you disagree with me? Do you think I'm right? Do you think I'm wrong? I thought it's useful to take a look at the numbers and see what's going on in Vermont, what's happened in the past, and how is that going to affect you in the future as somebody who is either buying or selling here in Vermont. I don't think there's a huge risk of vacation homes hurting the majority of Vermont. Maybe they're going to hurt the vacation towns, the towns that have the vast majority of those seasonal properties. But a lot of towns in Vermont, and especially where I work around Chittenden County, they're not. The majority of homeowners are not seasonal. Also, beyond that, inventories at record lows, and even if inventory increases, we shouldn't see massive declines. At least we didn't see massive declines when inventory increased drastically during one of the worst housing crises that we've seen in the last maybe 100 years. So leave me a comment. Let me know what you think. If you're looking to buy or sell a home, all my information is in the description. Other than that, I'll see you guys in the next video.